So this section here is about demystifying how the income tax system works in Canada. I often hear people say, I went up tax brackets this year, so I'm getting taxed extremely heavily. Or some people often will say, I've gone up tax brackets this year, so I'll probably end up with less money. So is this person right? Is this possible? So to understand this first, we're just going to go through some of the main concepts in terms of taxation. So as with other things in economics, we have the distinction between an average tax rate and the marginal tax rate. So the average tax rate is the ratio of the total taxes paid and total income earned. So if you pay $50,000 worth of tax and you've earned $100,000, well, you have effectively paid 50% of your income in taxes. Okay, that might be true for some. That they pay 50%, but what we're more interested in certain instances is this marginal tax rate, which means that it's the percentage or the fraction of an additional dollar of income that is paid in taxes. So here I'm interested in knowing, like, if I go from earning $100,000 to earning $100,001, how much of that extra dollar is going to get taxed? Because often the decision to decide to work more or not. So if I decide to take an overload, teach an extra course, or to take an extra job above my normal workload, I'm going to be interested in knowing, well, how much money does that extra job give me, and how much of that money will actually go to the government. The actual impact on my average tax rate and everything else, not as big of a deal. I'm really interested in knowing how much of that money earned will go to taxes. And the tax system we'll see in the next slide is arranged by tax brackets. So a tax bracket is a range of income levels where that marginal tax rate is the same. Because it doesn't always stay the same. It's progressive, but for big brackets, the tax rate is the same within that bracket. And in Canada and many other countries, we have a progressive tax system that makes people that earn more money pay higher income tax levels, pay not just a higher amount of income tax. Naturally, even if the percentage was the same, they would pay more income taxes because they earn more money, but they're going to pay a larger percentage of their income as income taxes. So maybe for someone earning $100,000, it's 50%. For someone earning $150,000, it's 52%, 53%, or something else. That's this idea that you pay more the more you earn. So progressive tax system is to protect the poor people. If we had something that we call regressive, it's actually a tax system that was introduced that is essentially hurting the poor people a little bit more. So if you were to impose a lot of taxes on basic necessities, because poor people, those necessities take a larger proportion of their total income spent, it's going to have a bigger impact on them. But in income taxes, we'll either have flat taxes, such as you could be found in Alberta, or a progressive tax system. So I still keep the 2011 ones here, but just simply type on Google income taxes Canada. And this website probably is no longer valid because it changes. But if you look at that, you might see that these amounts may change. So these threshold amounts between the tax brackets may go up year after year because of inflation. And sometimes you may notice that the tax rate may essentially be going up. So by having this 2011 example, you could kind of compare over the years what has happened to income taxes. Okay. So what this tells us on the website is that our income taxes for the first $41,544 is 15% of the tax rate. For all income earned between $41,544 and $83,088, the tax rate is 22%. And then it's going to be 26 and then 29 on anything in excess of that. So does this mean that going from a salary of $83,000 to $83,200 is necessarily a bad thing? Well, because if you just think about it, if you go from here to here, you're switching tax brackets. So a lot of people would say, yeah, it's a bad thing because Here at 83,000, I'm getting taxed 22%, and at 83,200, I'm getting taxed 26%. So the extra 4% will not compensate for all the tax money that is lost. However, they're mistaking, okay? Because if I look at it here, how much money is charged for this initial 41,544? Because if I go to 83,000, it's not all 83,000 that's charged at 22%. So there's going to be 41,544 multiplied by this 15% interest, not interest, but income tax. And this is going to give me that on the first 41,554, I will owe 6,231 and 60 cents. Okay. So if you earn 50,000 and you're looking at your income tax paper, they'll often say add 6,231 and 60 cents plus 50,000 minus 41,544 times 22%. Well, your income amount times that amount. So maybe that's why it's confusing for some, but let's say I go to 83,000. So now I'm not filling this whole bracket. So I'm going to say 83,000. Okay, so I'm going to look at 83,000 minus 41,544, which should give me 41,456. And that I will multiply by 22% or 0.22. And if I earn 83,000, I'm going to pay 9,120 and 32 on that amount. On that amount between 41,544 and 83,000. So at 83,000, I'm going to pay a total, if I add up these two amounts, of 15,351 and 92 cents. Okay. However, if I look at this idea that I'm earning more, well, what would happen? Well, that initial tax bracket has been filled, so I'm still going to use this amount. What's going to happen over here? Well, now I'll have this whole tax bracket that's going to be used, so I'm going to have $88 more than this amount that I have here. So if I do this plus 88, I'm going to have 41,456 plus the 88 is one way to do it, times 22%. It's going to give me now that in that tax bracket I will owe 9,139 and 68. And then whatever's excess here, well, 83,200 minus this 83,088 will give me 112, I believe. Let me just verify. 112, and this 112 at 26% is going to give me $29.12. So now in this case here, if I add up this amount, and this amount, I'll have 9,139, 68, 62, 31, and 60. So I owe in total 15,440 cents. Yes, I owe more than before, naturally, because I'm earning more money. But if I look at the difference between these two, if I deduct 83,000 by 15,351 and 92 cents, here I will end up with 67,648 and 8 cents. And over here, 83,200 minus 15,440 cents. I'm going to end up with 67,799 and 60 cents. So I could see my amount is greater, and by how much is it greater? The difference between the two is going to be, let's see here, $151.52 more that I get from this extra $200. And how is that the case? Well, that's roughly a quarter. That's roughly 25%. And why is it roughly a quarter? Because 88 of that $200 is taxed at 22%. and 112 of that $200 is taxed at 26%. So a larger quantity at 26%. So it's going a little bit more towards that. The mid-range would be 24, so it's somewhere above 24% is going to be the tax rate on that extra $200. But I'm earning more money. Okay, I am earning more money regardless of the fact that I've changed tax brackets. So to think that the tax bracket that you're changing is going to make you poorer is completely false. This is a big thing that you have to keep in mind. You cannot end up with less money after taxes by earning more. You cannot have a bigger salary and end up with less money if you're in the same country, same everything, dealing with the same income taxes. That can't be the case. Okay? Another thing I want to make sure to clarify here is the idea behind working overtime. A lot of people I hear say that they don't want to work overtime because they get taxed a whole lot more. And this is true. I remember when I was younger, I worked in factories and stuff like that. And some weeks I worked over 72 hours a week. And those weeks I made good money, but I got taxed a whole lot. Same thing here when I get paid for some of my overloads. Well, those weeks I have a bigger salary, but a lot of that extra income gets taxed. What's the reason behind that? Is the idea that some of these companies, most of the companies that use income tax software to determine how much income taxes you owe, when they run that weekly or bi-weekly paycheck, they kind of assume that you're going to earn the same paycheck throughout the year. So let's say normally you work a 40-hour week, okay, and you earn a certain amount of money, which would give you an annual salary of $50,000. But all of a sudden you decide to work 80 hours a week, and because of overtime, extras and stuff like that, it gives you a salary of, let's say, something like $125,000. Well, if the computer systems assumes that you're going to earn $125,000, your income tax rate, your average income tax rate or whatever, will be much higher. So they're going to take a lot more income out to make sure that at the end of the year, when income tax return season comes in, you don't owe any money to the government. However, to give you an example here, if in this case here, I work 80-hour weeks, so this is 80-hour weeks for like 4 or 5 months, which gives me $50,000, or I work 40-hour weeks for the whole year and it gives me $50,000. And this 80-hour week scenario, I'm going to get taxed more because it assumes that I earn that same amount of money throughout the year. So it's planning on me earning 125. So it's planning on me keeping a lot of money on the side for all of this income taxes I will have to pay. However, at the end of the year, how do we calculate how much income tax is owed? It's on the amount of money that we have earned. Over in this example here, it's on the amount of money that we've earned. Whether we earn this over a week, a year, a month, it doesn't matter. It's the amount of money in total that you've earned. So if you have the chance to work overtime and your boss says you could either get paid this overtime amount or we could bank it and then you get paid for it later on, but you don't get paid like a 1.5 the time, you just get paid the normal 1 hour for 1 hour. Well, he's helping himself out by doing that. Yes, the moment that you'll take it, if you take it on leave without pay and you decide to take that 1 week, the tax rate on that 1 week will be lower, but it's just going to be on that 1 week. If you had it paid earlier on in your paycheck, it's going to be higher. You're going to be taxed a lot more, but you're probably going to face a much larger tax return instead of owing money to the tax system at the end of the year. So what really matters for taxes is how much you've earned in total. And if you could earn more, do it. Even though you might get taxed more now, you're going to end up with more money in the end. Okay. Hopefully this is clear for you guys. It's a big concept. You have to know how this works to make your best decisions possible in your career.